Now, towards the end of this video, I want to get your help with something, but stay till the end. Hey guys, Matt here. Welcome back to this week's portfolio update. I like to show my portfolio once a week, somewhere around then, as I believe that sets me apart from the other stock YouTubers out there, and that I show my receipts. And I gotta say, I'm a little hesitant to say this, but we are looking good, and we are looking good for the second week in a row. I mean, take a look at this right here. We are just barely in the red. Like, if this keeps up, like, I might actually be making money here. Like, 1.1% in the red. I haven't seen numbers that good in a long time. Since, like, January or February. And, yeah, things have been shaping up for the second week in a row. I'm a little... I don't know. Like I said, I'm a little scared, but, I mean, I'm being cautiously optimistic about the whole thing. We got Gevo that's been... Oh my gosh, take a look at this. So I think a week ago, I said that Gevo was 38% by the month. But as of right now, as of close of business today, I mean, Gevo is, by the last 30 days, 55.6% up. Like, I haven't seen Gevo do that good consistently for a long time. And that kind of makes me wonder, like, what's going to happen to all these additional shorts? I mean, if you look from June the 30th to the end of July, how the shorts just massively increased. If Gevo keeps going up, I wonder what's going to happen to all these shorts. Like, they're going to have to cover eventually. And for a stock that's this much shorted, yeah, I mean, I'll be glad to say it. I ain't going to lie. Now, Gevo did report earnings on Monday. I made a video about this, which you can watch up there, which, I mean, spoiler alert, it's completely boring. Now, boring is a good thing. Don't get me wrong. It was a good report. Like, everything's on track, nothing's delayed, more contracts signed, a lot of money on the table. It's just that, I mean, it was boring. We also had Palantir reporting earnings Monday, and it was basically some good, a lot of disappointment, and the executives. I made a video about this, but the executives are just completely unlikable. Now, in my personal opinion, and that's not necessarily a bad thing as long as they're effective. And I think that their effectiveness, at least in this past quarter, these past several quarters, the effectiveness is starting to be questioned. So we're gonna have to keep a watch on Palantir and see what it does over the next couple of quarters. Now, as far as recent moves, I haven't added any cash this week. So the gains from this week, like, no cash has been added. This is all market gains. Now, so how I do things is every month I deposit $3,000 into Fidelity. And so 1,500 at the beginning and 1,500 towards the middle. And then from that, every week, so every Monday, I put $300 into a growth stock. And then every Wednesday or Thursday, I put $300 into a dividend/value stock. This week, I put in my 300 on Tuesday, but you know the drill. Now, as far as my plans going forward, this is where I'm looking for some of your input. Now, let's start with the goals. Now, Bank of America and Cisco were the first stocks I ever bought. It was well over 3 years ago, and basically, I'm on the way out with these stocks. I've been on the way out with these stocks, but that was before everything crashed, right? So it didn't make sense to sell while everything was, that far down. But now that things are on their way back up, I'm thinking of rotating these stocks out, taking profits, and putting that money somewhere. And I have a few different I guess ways of going about it. First way, and this is the way I originally thought, is to, for starters, do nothing. Because right now, the bull market, if we're in a bull market right now, is just starting. There's still a long ways to go before it's back to where it was. So maybe I just hold off and do nothing for a while. But if I do want to rotate out, I take these profits. I was thinking about putting into a few different things. Well, the first is an ETF that tracks the S&P 500. So that way I can put this money into a place where I can set it and forget it. And that might be the best move for me. Another stock I've been meaning to put that money into is Google. Now, Google is a stock that I've been interested in for a while. And as far as a split adjusted basis, it's pretty low. And from a statistics, for a growth stock, this is looking pretty good. So it might make sense to put money into Google. Now, Thing with that is that these stocks are both dividend paying stocks. And if I put money into Google, I would lose that dividend for the time being. I also thought about putting that money into another value stock like Target. Now maybe Target's trailing a little high on the PE, but I mean, it's an option. Target is, I would consider, a safer stock that has definitely seen better days. So that's another stock I've been thinking about, but not too sure. So to sum up my decisions: one, do nothing, let these stocks continue to go up. Two, sell these and put the money into an ETF that tracks the S&P 500. Three, sell these, put the money into Google, or sell these, put the money into Target. So yeah, if you guys have opinions on that, I would love to hear them. But anyways, take care, have a great day, and eat your vegetables.